Good afternoon. This is Brian Shannon from Alpha Trends Blogspot. It's Thursday, February 8th, 2007. The S&P 500 on the screen. S&P's closed with 27-cent loss today, and it continues to be in a bullish uptrend. There's no reason to read into this as the beginning of anything more meaningful until we see breaks of important support levels, and we'll take a look at some intraday levels here in a moment. First of all, in the daily time frame, though, we're going to continue to look at this about 144 level right here. Should be an important area of support going forward, and a break of that will give us reason for a little bit of concern. Wouldn't mean that it's time to rush out and sell things short, but it would give us reason for concern. Like I said, that's about all. So if we look at let's take a look at the 10-minute time frame. The 10-minute time frame we saw yesterday, we were looking for support at about 144.35, and that's exactly where we came down to today, and the market was able to bounce once again. The only thing that disturbs me here, and only slightly on this short-term time frame, is the fact that we do have lower highs in here. So next, if we do get a break of this level, we've had 3 tests of it here, then that could be leading to a deeper pullback, perhaps down in towards this level where we saw the breakout from last week. So continue to be cautious in here. We've got all these moving averages crisscrossing. The 5-day moving average is starting to flatten out, so it's looking like some consolidation in here. Still not ready to sell short until we break below this low here. I think then if you want to trade against the primary trend, which is clearly still higher, but just for a short-term short trade, I think the best place to do that is probably somewhere below here, or even maybe breaking this level with a stop up above here. But that's not the way I like to trade the market. It could be setting up a double-shouldered head and shoulder pattern, in which case we'd maybe make one more test of the support, a little bit of a bounce, and then break through. That's getting a little bit too speculative in terms of what might happen. So let's take a look at the Nasdaq. Nasdaq closed with a penny loss on the Qs today, but it does hold above this level right here, which is the neckline that we've been looking at. Just again on the daily time frame, since this crossover right in here of the 10 and 20-day moving average, we've had a whole bunch of nothing happening in this market. I think a lot of people are looking for a top here, which is why I think that this 30-minute time frame where we see this inverted head and shoulders pattern setting up, I think this could catch a lot of shorts off guard. And we've had a test of the neckline, so this neckline, the resistance, typically will act as support on a pullback. We see that happening. We've got all these moving averages rising, including that 5-day moving average. So once again, I'm going to continue to say that our important level of support probably is down near 44.25. But I think getting above this 44.65 from yesterday, that could put the pressure on the shorts, and we could see a move up towards about 45.25, 45.30 pretty quickly. Let's take a look at the 10-minute time frame, and we can see what happened in here today is it didn't make a higher high, and like I said on the S&P, that's a little bit of reason for concern. Nothing to worry about, but just reason, something to be aware of, I guess is a better way to put it. But if the Nasdaq then makes a lower low right in here by breaking this support, then we've got to consider this little inverted head and shoulders pattern suspect, and it might be a failed move. And if this inverted head and shoulders breakout fails, then we could have a more meaningful pullback, and that meaningful pullback could come quickly and bring us down towards the 43 level. So we're kind of in no man's land. I want to give the benefit of the doubt to the buyers because the primary trend is still higher, and we've got the mid caps obviously continue to just chug along here in their uptrend. They were down 11 cents today, which is one of the first days they've been down in about a week and a half, 2 weeks. But the mid caps are approaching again that target up near 55.5, 56 from the inverted head and shoulders pattern that we'd seen in there. And now it's definitely extended in this mid cap market, but we're still seeing a pattern of higher highs and higher lows. So I think the important level of support right now is about 154.5. And that's maybe about 154.30, let's call it. That's this resistance here, which acted as support early on this morning. So breaking below that wouldn't be a reason to sell short, but just a reason to get a little bit more defensive in our outlook. S&P or Semiconductors, SMH, these guys put in a lower high as well. So now we've got to look to about 34.10 or so, breaking below that. That might give us a little bit of reason for concern that the recent uptrend of the last 2 weeks might be weakening, but again, just in the middle of a dead range here for the semiconductors, so don't read too much into it right now. Let's take a look at the stocks we've been involved in. First up is Dollar Financial, symbol DLLR. Let's take a look at the 10-minute or 5-minute time frame. We got involved in this one at 30.05 yesterday, and that was actually late in the day right here. What we were looking for yesterday was that pullback first and then the buy on strength. So should have been involved at 30.05. Stop was 29.68. Let's raise that stop to about 29.90, and that'll give us just 15 cents of risk right now, unless of course the stock gaps down. But theoretically, our risk right now is 15 cents if we're in at 30.05 and our stop is at 29.90. Respironics we got involved in yesterday at 41.95, right in here, and I'm gonna say raise your stop at this point to $42.40 in Respironics. So that one's starting to take off a little bit for us, which is nice to see. ICGE, Internet Capital Group, this thing rallied pretty strongly into the close here, so we got involved in this one yesterday at $11.25. Our stop had been suggested today at $11.15, so that was not hit. We saw a low of about $11.17. I'd say right now, why don't you raise your stop in here to $11.33 for shares of ICGE. And XING, we had a nice move in this one yesterday, and we were stopped out right in here with a gain of 55 cents for XING. So we'll take that one off the list for now. Stocks that we looked at last night were applied or advanced rather magnetics. Looking to buy this one on a break above 63 bucks a share. That never occurred, so if you took a loss, you weren't paying attention to what I said. CRUS, we were looking to get involved in Cirrus Logic. What price? I guess $7.90 right here. So once that broke above 7.90, we were to enter that one with a stop at 7.71. Let's raise the stop right now to 7.85 in shares of Cirrus Logic, and it was good to see some more volume. I was kind of concerned of this breakdown with volume in here, but then it kind of drifted lower on light volume, and then the volume came back in at the end of the day. So this one still looks safe right now, but 7.85 looks like the place with a stop. United Airline, UAUA, UAL Corp, whatever the heck you want to call it. We're looking for a pullback to 45 bucks a share, and then the buy at above 45.20, which we did get. And our stop was to be way down at 44.45, way down here. Let's go ahead and raise that stop to 44.65 in 44.65. Yeah. Let me take a look. Let's take a look at a 2-minute time frame. Let's call it 44.76. Let's raise it to 44.76. That would give us about 46 cents of theoretical risk in UAUA. Our one short sale candidate was Alexion, symbol ALXN. We were to sell this short below 40.95, then put our stop at 41.25. So 41.29 did not trade after we were entered. We got our entry, that is. So let's lower the stop now to $40.95 in ALXN.